students. Today we have a very exciting topic for you, and this is about gross profit and net profit. Our learning outcomes for today, students will be able to understand what is the major difference between gross profit and net profit. How will you compute your gross profit, and how are you going to compute your net profit? And you will be able to understand what is cost of goods sold. And you will know also the underlying reasons why we need to know the difference between gross profit and net profit. Let us proceed. We have two types of profit. Number one is we have gross profit. Number two, we have net profit. Gross profit is your business revenue minus the cost of goods sold. What is cost of goods sold, or the acronym COGS? COGS is how much money you spend directly making your products. When we say directly making your products, so you have the component of the direct labor cost and the direct material cost. So those are your cost of goods sold. However, in non-manufacturing environment, there is no such thing as cost of goods sold, no? There is cost of service, okay? But we are limited to our discussion to our manufacturing setup. All right, let us continue. Gross profit is your company's profit before subtracting expenses. Before subtracting expenses. While net profit is your business revenue after subtracting expenses. Okay? All right. And net profit is subtracting all operating interest and tax expenses in addition to deducting your cost of goods sold. So, meaning to say, there will be companies where your gross profit is higher and net profit is lower, no? So there are, companies are monitoring this, no? They have a matrix for things that they need to do if net profit is very much lower than the gross profit. Okay, and we will know that later on. So let us proceed. Here is an example of a company template for income statement for the calendar year ending December 31st, 2020. So here, this company generated a total revenue of 150,000 K. And the cost of goods sold, meaning to say that is the direct labor cost plus the direct material cost, gives them 25K. Okay. And then, by the formula, gross profit, you have to subtract cost of goods sold from revenues. So, if you subtract 150 less 25K, it gives you 125,000. So immediately, you are not deducting expenses. So that is gross profit. Okay. Now, here, this is your operating expenses. Okay. And there is also an expense here. Okay. This might be considered, okay, uh, these interest and taxes are considered your fixed expenses. Of course, there are two kinds of expenses. There is variable and there is fixed expenses. Okay? So, your payroll, utilities, your rentals, and depreciation are considered your operating expenses. So, the total of this gives you 50,000. But of course, you have to deduct again this remaining two expenses which is considered fixed less sorry. So you add this 50K plus 30 gives you a total of 80K total expenses. Okay? So net profit is gross profit minus this one. Let me this one, the gross profit 125 less 80,000 gives you your net profit of 45,000. There you go. So the bottom line here is this. It is easy to understand, students, that net profit is that you already subtracted your expenses with combined variable or OPEX and your fixed expense from the gross profit. But for gross profit, you haven't subtracted yet your expenses. What you subtracted only was the cost of goods sold. Very good. All right, let us proceed. Let us show an example here. A certain business has a gross profit of 8,000 pesos. Okay? Um, and then the business expenses are the following. They have rent, utilities, employee wages, supplies, depreciation, taxes, and interest. So therefore, okay, total expenses, you have to add all of that expenses. So it gives you 1,000 plus 250 plus 2,000 plus 300 plus 500 plus 1,000 plus 250. The interest gives you 5,300. So if you want to get your net profit, you deduct that expenses, okay, that expenses from the gross profit. So the net profit of this example is 2,700. So it is very easy. You just have to add all of your expenses, your operating expense, your fixed expense, and then deduct it from the gross profit margin. Okay, so what are the reasons for identifying the difference between gross and net profit? Of course, you have it because business, if your gross profit is this much, that is not the bottom line of the business, that you have to, shell out the dividends for the shareholders, because the barometer of the business is the net profit. Okay, knowing your business gross profit can help you come up with ways to reduce your cost of goods sold. Or you have a strategy of increase your pricing in your marketing strategy when you are designing your pricing strategy. All right. So the there are ways and means, no? Like for example, the direct labor cost. There are some companies that are, you know, um, hiring contractual workers to bring down the cost of their salaries and wages, because once you are using contractual workers, there is no benefit. So somehow it lowers down the cost of your labor. However, there is already a mandate coming from President Duterte that he is encouraging the use of contractual employees except for certain industries. Now, with coming to direct material cost, of course, there are, without sacrificing quality, you can, have alternative suppliers or pool of suppliers for that particular raw material so that you can negotiate the price. That is one in the procurement process. Or maybe source out a supplier that is near the vicinity of the factory rather than getting it from inside Metro Manila because there is delivery cost, no, it entails time, or you can, use the quantity and time cost quality strategy, no, quantity, quality, time and cost, no, or if that is an imported material, so you might think of ways and means, maybe that material, instead of getting it from abroad, maybe we can have a local produce as alternative source of raw materials. Number two, if your net profit is significantly lower than your gross profit, so gross profit is here, net profit is very low, no? What is the strategy? You can determine your expense cut or cost savings, no? Like for example, in your administrative costs, you might use, instead of pure white paper, you can use a a reuse, no? You can reuse that bond paper, especially at the back for internal communication, or you can do a program of paperless, no, transactions. So these are examples of how you can do cost cutting, no? And then number three, investors and lenders can determine how much money you have after paying all your expenses. Meaning to say, if you are sourcing for an investor, if you are going to, take a loan from the bank, so what you need to do is to show your income statement, okay? And then of course, the investor or the lender is not going to uh, scrutinize the gross profit, but they will try to look at the net profit because they will know how you control and manage your variable and fixed expenses. And they will know based on your revenues how much you are really uh, getting the share of the market, your growth, understanding the needs and wants of your customer, and you are really doing a good implementation of your marketing strategy. So that ends our tutorial video, students. Thank you for those students who are continuously and religiously subscribing, viewing, sharing my channel and these videos. And for those who are new to this channel, please subscribe, share, and like the video. So always keep safe, everyone, and I'll see you on my next tutorial. Thank you. Our reference is Rachel Blakely Gray, October 9, year 2018. Gross profit versus net profit, Patriot Software LLC, downloaded from Uniform Resource Location Address, this URL, dated October 30th, 2020.